Welcome to my channel. My name is Tim Sutherland. Today I'm going to go over credit report. People apply. One of the things we do is we pull the credit report. Also, often I get people they call, they're trying to find out if they qualify or not, and they may have a vague idea of the credit score, but nothing else that's on there. Now what we're going to do is go through and point out what we look at, including trade lines and how they impact how we're going to direct the loan in terms of investor and qualifying. So when we pull your credit report, it looks something like this. It'll come from the credit bureau company, which for a mortgage company, they give us what's called a tri-merge. You're going to merge three bureaus, Equifax, Experian, and TransUnion. Of course, I have to name the mortgage company, loan number will populate, reference number, and so forth. And of course, it will have what we input was the names and addresses of the buyers, Social Security numbers, and date of birth. Of course, these are all fictional on here. And I'll give the residence information is based on what the credit report has, or credit history. Current address, prior addresses when they're aware of when it is on the credit bureau. Also gives us whether or not the employer is accessible through the work number, which is automatic verifying service. Many lenders use this as a quick and easy way to verify employment. And as you go through, it'll have the applicant's names down there again, give all the page numbers. This gives you a quick synopsis of what we're looking at. We can skim through this before we head into the rest of it. See whether or not they need 30-day late payments, 60-day or 90-day late payments, roughly what we have in total monthly payments for installment revolving, balances, limits. And we'd skim across the bottom, see if there's anything we should have some concerns about. In this case, there are none. And that gets to the credit scores. So for the applicant and co-applicant, it's going to give the credit scores in each case. In our scenario, the applicant has a 767, a 765, and a 717, and it lists the bureaus that they come from. Co-applicant, the same thing. Now, very often you hear about your score, singular. And what that is, in most cases, the lender will use the middle score. If you have multiple borrowers, they will use the lower score. It means they'll take the middle score from each client, and then for each borrower, and whichever one's lowers the score. There are a few investors that will use the middle score of the higher wage earner. But in most cases, they're just going to use the lower score. So in this case, our applicant has a 767, 765, 717. So the middle score is 765. Co-borrower has a 786, 756, and 756. Middle score is 756. So if we look at these two middle scores, 765, 756, and we see that the lower of the two is 756. And when I say middle, coincidentally, they're in order on this sheet. They're not always in order. It's just middle score when stacked in numerical order. So in this case, the client would go, what's my score? And in that scenario, I would understand to mean their score used for price and qualifying, and that would be a 756. Credit bureaus give a bunch of reasons for how they came up with the score. As a lender, we don't really look at that too much. They skim through it, but doesn't really come into play. So then we would go to the credit history. For example, we're looking at this. Each one of these is called a trade line. And in some cases, investors are looking for not only a specific number of trade lines, some investors want them to be open, some don't care if the trade line's open or closed, some want a certain history. Say you've had it at least 12 months or 24 months. Others say the accounts can be open or closed. Others say you have to have used it within the last 12 months, has to be open for the last 24 months. And so forth. There are a number of variables. You come into this More so when you look into your non-conforming loans, which many people understand as jumbo loans. But even some conforming lenders will have trade line requirements, which is your Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac themselves generally do not have a trade line requirement, but some of the lenders that you speak with may have what's called an overlay, and will have a certain number of requirements in that case. Where I work now, we don't have that overlay on the Fannie and Freddie loans. However, in jumbo, it will. So if I get somebody calls and they want to try to get an idea what the qualifier, even where the pricing is, I can get a generalized idea on phone if they may know where the credit scores are, but even then, not really, because people get the credit scores from many places, most of which are not accurate or not what we pull. So when you're getting into that range as a client, you're doing yourself a disservice. And in terms of trying to get information but not getting your credit report pulled just because of the nuances from one investor to the next. So in this case, credit history, for example, this client, co-applicant, has this credit card. It was opened back in 2015, reported recently, and last payment recently. So we're looking at this. Has the account used recently? Does it have a history to it? Double checking that. Next one. This is the applicant. Has an account here. Opened a few years ago. Gives the high credit, balance, payment. Pays at agreed. Go to the next one. And all the account numbers and everything on this report are fictional. In this case, it was the applicant. This one's also old, so it's a usable account. And so far, these are revolving accounts. In addition to revolving, some investors will require a certain number of installment accounts on top of revolving. I want to point that out also. Got the next one. The applicant uses this card. They've had it for a while, but the co-applicant is an authorized user, so we cannot count that. Most investors will not count an authorized user. And I want to stress that because there are a lot of videos I see about getting added onto somebody's account as an authorized user, saying that'll help you when it comes time to get a loan. So there's even things there where people do them as what they call a side hustle. Say, hey, give me a certain amount of money, I'll put you on as an authorized user. When it comes to the mortgage, you're going to find that you've wasted your money and time doing that, because most investors are just not going to count authorized users. Even Fannie Mae and Freddie Mac, when running their decisions, it ignores authorized user accounts. Next one, for example, also been a couple of years. No lates, pays as agreed. So we look for these trade lines. Another one here. This is an old account. Paid as agreed. No late payments, not past due. And so forth. And that's what we have to look for. Now we have to count them. The ones that fit that particular investor need. Like, for example, some of them that require that the account be used recently, we wouldn't be able to count this for two reasons. One, it's an authorized user account. Number two, it hasn't been used in many years. This one doesn't show a last payment. We probably need a little more information on that. And then we go here, no disputed accounts, because if you dispute an account, some investors will discount that credit line. No derogatory accounts. And then it lists accounts that are closed. And so if we have an investor that's not counting closed accounts, we're going to ignore all these when we do our trade line account. We're just going to keep skimming through the closed accounts like that. And then we come to public records. It's checking to see if there are any bankruptcies, judgments, liens out there. And it'll let us know. It's not the only source that's used to check for those things. There's some other sites that are done in software we use in the background to search for that, but it gives us a quick look to see if it's there. And then file identifications. Is there a match between what we entered and what's here? For example, if you look on there, like for example, this bureau has a middle initial, that's pretty much of a match. The Social Security numbers match. They come back with different social. Means maybe we've got an input error, or Social Security number just isn't correct. Then you got name variations. This happens often over time. I like to think it's mainly by whoever input credit information at the bureaus, or somewhere along the chain of your credit history. Somebody may have put a different name by mistake, misspelled it, things like that. Those are your name variations. So in the mortgage world, you may get a form that says also known as, and it'll list the name variations. Generally have a couple options. You can go, yeah, that's me, sign, or you can go, no, it's definitely not me, and you cross it out and initial it. That's how we do that here. The lender may have a different policy on that. So it depends on your lender. You want to talk to them about how they want to address name variations, because they're all going to have you sign form at closing, what I refer to as the also known as form. And then no additional information found. It'll list inquiries right there. Give us a list of those. When they were pulled inquiries from the mortgage standpoint, they only stay on about 90 days. Generally, we want to look at that and see, have you got credit for any of these? In the case of this client, it looks like they had a whole lot of places pull their credit in one day, right there. Check for regulatory records, and then it gives the consumer referral information, which names it 3 bureaus. And that's what it looks like for a credit report that we pull. But just to reiterate, especially if you're shopping mortgages, you really do need to let the lenders pull a credit report, because they do need to count the trade lines in order to better assist you in lining up with the correct investor. If you have any questions, leave comments below. Hit the like button if you like this. Follow me. I'll keep adding videos over time. And thank you very much. Bye-bye.